Hello everyone, welcome to the ichimokujcharts.com daily analysis for the S&P 500 for Monday, June the 25th, 2012. Well, a continuation of the trend to the downside today, a very large black body candle that's making a lower high and a lower low. Previous day's trading, we had a white bodied candle which saw the buyers take control of the market for that trading day. There was potential for a change of trend to the upside. This is a Harami type pattern, a potential reversal pattern, and we should have been looking to the high for confirmation of that reversal, which we haven't seen today in this market. We've seen the market trade nowhere near that high and sell off for most of this day. The very large black body saw the sellers making a substantial amount of net bearish progress on the day between the open and the close, and it's a very similar candle to the one we saw 2 trading periods ago, although that candle was slightly larger in terms of the size of the body. The market did test support down at the Kijun-sen, the pink line here, and has just closed slightly below there, but we did see some buying coming down around the 1310 level, and coincides with this area around these 4 candles where the market found support just below 1310, extending down to about 1307. So that's a very important area moving forward for tomorrow in terms of strong support for this market. We also have very strong support down around the 1300 level, a round number, extending down to 1295, and then more support down around 1277, extending down to around 1269. In terms of the Fibonacci extension, and what we're examining here is the relationship of the current downtrend to the previous time the market was trending down, and today we saw the market take out the 161.8% level at 1316 in a bearish manner, and that could be important. If the market does continue selling off, and if we do trade through this crucial level around 1310 extending down to 1307, we could see the market trading down to 1287 to the 261.8% level. So that's an important target if we see continued bearishness over the next day or so. In terms of the Fibonacci retracement of the prior upswing, and here we are approaching the support at the 100% level, and we know here from these 4 candles that that is a very strong area. That's at 1306, but we know that that zone extending from 13010 down to 1310 down to roughly about this 1306, 1307 level is going to be very, very strong. Now, in terms of Ichimoku, we have a bearish market in big picture terms by trading below the cloud, so the long-term time frame is bearish. The market is technically just bearish in the medium-term time frame by trading below the Kijun-sen, but we are trading at pretty much at the Kijun-sen, so it's quite neutral in the medium-term time frame. But the market is definitely bearish in the short-term time frame by trading below the Tenkan-sen, the green line. The market broke out below the Tenkan-sen in a solidly bearish way 3 trading periods ago. Previous day's trading, the market attempted to rally but found resistance at the Tenkan-sen, and now we've seen that sell-off continue. When we look at the Chica span here, that is just above the closing price of the corresponding day, so not supporting any of the bearishness that we're seeing in this market at the moment, but that could certainly change over the next few days. So we have here a market that's quite bearish in terms of the long-term and short-term time frames, neutral in the medium-term time frame, finding some support at the Kijun-sen, the pink line. The short-term dynamics are favouring the sellers in this market. There is a very strong likelihood that the market will test lower. The area down to 1306 is very strong support, but we also have very strong support around the round number 1308, extending down to roughly 1295 and just below.